Silver has been sitting in the shadows of gold for decades. Most people look at the stock market when things get shaky, but 2026 is looking a lot different than the years we've left behind. Three massive forces are colliding right now: war, inflation, and a supply gap that nobody is talking about. If you look at the charts, something feels off. The prices we see at the grocery store aren't going back down. Everyone feels the squeeze every time they tap their credit card. But have you noticed what's happening to the actual metal? Silver isn't just for jewelry or coins anymore. It is the backbone of the technology we use every single day. From solar panels to electric vehicles, the demand is exploding. At the same time, the world is becoming a more dangerous place. Conflict in multiple regions is destabilizing the global economy. When tanks move and drones fly, investors get nervous. History shows us that nervous money flows into hard assets. Gold usually leads the way, but silver eventually catches up. In fact, silver often moves much faster once it starts to run. Some analysts are pointing toward a target of $100. That sounds like a massive jump from where we are today. But is it really that crazy when you look at the math? Inflation has eroded the purchasing power of the dollar. $100 today doesn't buy what it did 10 years ago. If you adjust for that, silver is actually incredibly cheap right now. Central banks are hoarding gold at record levels. They know that fiat currencies are under immense pressure, but individual investors are starting to realize they can't all buy gold. Silver is often called the poor man's gold. That's a bit of a misleading name, honestly. It's more like a coiled spring waiting for a reason to snap. Look at the mining data from the last few years. We are pulling less silver out of the ground than we are consuming. Deficits have been growing year after year. The silver sitting in global vaults is being drained. What happens when a supply shortage hits a period of high inflation? Prices don't just go up slowly, they tend to gap up overnight. Think about the last time you saw a major commodity spike. It usually happens when everyone tries to get through a very small door at once. Global conflict only accelerates this timeline. War requires industrial production on a massive scale. Electronics, guidance systems, and heavy machinery all need silver. It is an essential material for the modern theater of war. So you have industrial demand fighting with investor demand. The available supply is stuck in the middle. It's a perfect storm that has been brewing for a long time. Are you watching the silver to gold ratio lately? It's at levels that historically suggest silver is undervalued. When that ratio corrects, the moves are usually violent. 2026 might be the year the music finally stops. The global banking system is feeling the heat right now. And when interest rates stay high for too long, things start to break. We've seen it with regional banks, and we're seeing it with consumer debt. Credit card balances in the US have hit staggering new heights. People are turning to debt just to keep up with the cost of living. Inflation isn't just a headline anymore, it's a daily reality. It's the hidden tax that eats away at your savings every single night. If your money is just sitting in a savings account, it's losing value. That realization is what drives people toward silver. Gold is for the wealthy to preserve what they already have. Silver is often the play for those looking to build something, but is there enough of it to go around? Most silver is actually a byproduct of mining for other metals. Zinc, lead, and copper mines provide a huge chunk of the supply. If the global economy slows down, those industrial mines slow down too. That means even less silver hits the market. It creates a supply squeeze that is almost impossible to fix quickly. You can't just turn on a silver mine like a light switch. It takes years of permits, drilling, and infrastructure. While the supply stays flat, the green energy transition is accelerating. Solar panels are one of the biggest consumers of silver on the planet. Every single cell needs a silver paste to conduct electricity. As the world moves toward 2026, those targets are getting closer. Governments are pouring billions into these technologies. They aren't checking the price of silver before they sign the contracts. They just need the metal to make the panels work. That creates what we call inelastic demand. Basically, the buyers will pay whatever it takes to get the material. Now, add the layer of geopolitical tension to that fire. When countries are at odds, trade routes become targets. Shipping lanes that were once safe are now high-risk zones. Insurance costs for cargo ships are skyrocketing. This makes moving physical silver across the ocean much more expensive. It also makes countries want to hoard what they already have. China and Russia have been very quiet about their silver stockpiles. They are likely building reserves, just like they are with gold. Do you think they would tell the rest of the world if they were? Probably not, because that would drive the price up before they finish. The US used to have a massive strategic silver stockpile that was depleted decades ago to keep the price suppressed. Now, there is no government safety net left. If a true shortage hits, the market is on its own. We are looking at a scenario where the paper market decouples. The price on a screen might not reflect the price of a physical ounce. Have you tried to buy physical silver during a crisis? The premiums over the spot price usually explode. A $30 spot price doesn't matter if the coin costs $40. That's the first sign that the roadmap to 100 is real. The physical metal starts to disappear from the retail market first, then the big industrial players start to panic buy. Industrial panic is a different beast than retail fear. When a factory needs silver to stay open, they don't care about the chart. They just need the delivery truck to show up at the loading dock. If it doesn't, the entire assembly line grinds to a halt. That is the moment when just-in-time delivery fails. Companies are starting to move toward just-in-case inventory. They are buying silver now to make sure they have it in 2026. This front-loading of demand creates a massive price floor. It's not just about speculation anymore. It's about survival. Think about the military-industrial complex for a moment. Modern missiles use a significant amount of silver in their guidance systems. If global tensions continue to escalate, that demand goes vertical. The Pentagon doesn't look for a bargain when they need components. They outbid everyone else to secure the national supply. This leaves the average investor competing with the world's biggest budgets. Have you looked at the debt-to-GDP ratio in the United States lately? It's reaching levels that historically lead to currency devaluation. When a government can't pay its bills, it prints more money. More money chasing the same amount of silver equals a higher price. It is a simple mathematical reality that most people ignore. The dollar is losing its status as the undisputed king of trade. Bilateral trade agreements are popping up all over the globe. Nations are trading oil for gold or manufactured goods for silver. This shift away from the dollar creates a vacuum. Hard assets are the only thing that can fill that void. Silver is uniquely positioned because it is both money and a commodity. Gold is mostly just money sitting in a vault. Silver is out there in the world, getting used up and thrown away. A huge percentage of silver used in electronics is never recycled. It's too expensive to recover tiny amounts from millions of devices. That means the total pool of available silver is actually shrinking. We are literally throwing our monetary future into landfills. Does that sound like a recipe for low prices to you? Every year, the gap between what we mine and what we use gets wider. The silver market is relatively tiny compared to the stock market. It doesn't take much new money to move the needle. If even 1% of stock market wealth moves into silver, the price explodes. We saw a glimpse of this during the silver squeeze a few years ago. The retailers almost broke the physical market in a single weekend. Imagine what happens when the big institutional funds join in. They have trillions of dollars looking for a safe haven. By 2026, those funds will be looking for a way out of failing bonds. They will see silver as the ultimate value play. It's the only asset that hasn't hit its all-time high adjusted for inflation. Even at $50, silver would still be cheap compared to 1980. $100 isn't a fantasy, it's a correction. It is the market finally acknowledging the true value of the metal. Are you positioned for a move of that magnitude? Most people will wait until the price is already at 80 to buy. The roadmap is clear, but the window to act is closing. The psychological shift in the market is just beginning. When people see a price hit 50, they don't sell, they buy. FOMO, or the fear of missing out, is a powerful driver. It happened with tech stocks, and it happened with crypto. Silver is the next logical candidate for a massive retail surge. Imagine the headlines when silver breaks its long-standing record. Every news outlet will be talking about the new silver bull market. That's when the smart money starts to exit and the public rushes in. But 2026 is unique because the fundamentals support the hype. We aren't just talking about a bubble driven by social media. We are talking about a fundamental shortage of a critical industrial metal. Central banks can't print silver to fix a supply deficit. They can't lower interest rates to make more metal appear in the earth. The physical reality of mining is a hard limit on growth. Every ounce that goes into a missile or a solar panel is gone. It is removed from the investment pool forever. This creates a supply floor that keeps the price from crashing. Even if the economy enters a deep recession, the demand persists. Green energy mandates aren't going away because of a market dip. Defense spending doesn't stop when the stock market goes red. In fact, those are often the only sectors that keep growing. Silver sits right at the intersection of those two worlds. It is the ultimate hedge against a crumbling global order. Have you considered what happens if the dollar loses 10% more? That alone pushes the nominal price of silver significantly higher. $100 in 2026 might buy what $60 does today. The number on the screen is just a reflection of currency debasement. People who hold physical silver aren't looking for a quick flip. They are looking for a lifeboat in a very stormy sea. The roadmap to 100 isn't a straight line, of course. There will be massive volatility and sudden pullbacks. The paper shorts on the COMEX will fight to keep the price down. They have a vested interest in making silver look like a bad bet. But paper contracts can only suppress the price for so long. Eventually, someone stands on their right to take physical delivery. When the warehouses go empty, the paper market collapses. That is the black swan event that everyone is waiting for. It's the moment the true price of silver is revealed to the world. By then, the local coin shop will likely have nothing left on the shelves. The websites will show out of stock on every silver bar and coin. We've seen previews of this during the pandemic and bank scares, but 2026 could be the permanent shift we've been tracking. War and inflation are the catalysts that change the narrative. Silver is simply the beneficiary of a world in chaos. Are you watching the exits, or are you watching the gold to silver ratio? The window of opportunity usually closes right before the big move. History doesn't repeat itself, but it certainly rhymes. And right now, the song it's playing sounds a lot like 1980. Only this time, the stakes are much higher for the global economy. The roadmap is laid out, and the destination is closer than you think.